Have you ever wished the stock market would pay you to wait for a great price before buying a stock? Well, that's exactly what selling put options does. I know that sounds crazy, but imagine that if every time you wanted to buy a stock, the market handed you a check just for being patient. That's the magic of selling puts. And in today's video, I'm going to break it down step by step, no complicated language, no guesswork. Now, before we dive in, if you want proof that this works like these recent trades, check the link in the description. I share the real trades I'm actually making and the exact strategies inside my options trading community. You'll see why our members are earning consistent monthly income using simple, low-risk strategies like this one. Now let's start with the why. Most people are taught to buy stocks and hope they go up, but hope is not a strategy. Now imagine flipping that mindset, and instead of paying full price and praying, you get paid upfront to wait for the stock to come down to your ideal entry point. And if it never drops, you still keep the money. That's what happens when you sell a cash secured put. You're basically saying, I'll agree to buy the stock at a lower price, but you've got to pay me for that promise right now. And if that promise doesn't get triggered, you walk away with pure profit. This is not a gamble. This is intelligent investing. You're positioning yourself like the house in a casino, getting paid regardless of what happens. All right, let me show you exactly how this works, step by step. Step 1, pick a stock you actually want to own, not just something random. Let's say it's Amazon. Step 2, choose a price you'd be happy buying it at. Amazon is currently trading around $217 now, and you'd love to own it at $200. Step 3, you sell a $200 put option, which means you're saying, I'll buy 100 shares of Amazon at $200 if it drops, but pay me for making that promise. Now, here's the cool part. When you sell that put, someone pays your premium. For Amazon right now, it's $221 per contract. It shows $2.21 because it's $221 per share, and each contract controls 100 shares. So $2.21 times 100 shares is $221 that you're getting paid upfront per contract right now. You get that cash immediately. Whether Amazon drops or not, that money is yours to keep. If Amazon falls below $200, you're obligated to buy it. But that's exactly what you wanted anyway, just at a better price, and you still got paid. If Amazon doesn't drop, you don't buy the shares, but you still keep that $221. Rinse and repeat. This is why I call it getting paid to shop for stocks on sale. Now, let me be clear. Most people mess this up. They try to sell puts on junk stocks they don't want to own, or they get greedy and sell strikes too close to its current price, thinking they'll get rich fast. But then the stock drops hard, and they're stuck with a bag they didn't even want. This strategy only works if you choose quality stocks, you pick strike prices you're genuinely happy to buy at, and you keep enough cash on hand to follow through. That's why it's called a cash secured put. You're not borrowing, you're not using margin, you're trading like a pro with risk you control. Let me show you a real example from my options trading community. I sold a cash secured put on Nvidia when it was trading around $108. I sold the $90 strike for $1.89 premium. That's $189 in cash received per contract. I did 5 contracts, so I collected $945 upfront for making that promise. The stock never dropped to $90, so I never bought it. But guess what? I didn't want to wait till the expiration date, so I closed the trade early and still kept almost $680 out of the $945 I collected. Repeat the same setup 3 to 4 trades a month, and it adds up. And if the stock had dropped to $90, I would have been thrilled. I would own a great company at a great price and still keep the premium I got paid up front. This is how I generate income on autopilot. Most people are sitting on the sidelines waiting for the perfect time to buy a stock. Meanwhile, I'm getting paid to wait. Think about that. This strategy turns you from a passive investor into a strategic one. It's like saying, I'll buy that house, but only if the seller lowers the price and gives me a bonus check for waiting. This is not about chasing the market. It's about creating your own advantage every single month. That's the difference between trading and trading with intention. So let's recap. Selling puts lets you collect cash up front. You get to name your price to buy stocks you love. If the stock never hits your price, you still win. If it does, you buy cheaper and still win. This is how the pros generate consistent income, by thinking like a business, not a gambler. Now, if you want help finding these trades, managing risk, and following a proven system that actually works, check out the link in the description. Inside my community, I share the trades I'm actually making, along with a community chat, step-by-step guides, and the support you need to succeed. Whether you're brand new or looking to level up, you don't have to do this alone. Let's make the market pay you for a change.